The weekend is finally here and it's time to look back at all the corporate and startup updates here on Companynama. I'm Ajay and let's kick things off with the corporate updates. First up, Anil Agarwal, promoted Vedanta on 19 January, has said that it will sell Zinc International assets to Hindustan Zinc for a cash consideration of $2,981 million. In a disclosure to the stock exchanges, Vedanta said that the transaction would be an all-cash deal which would be completed in a phased manner over 18 months. The deal is subject to regulatory approvals, including shareholders' nod. Following the transaction, THL Zinc, which is a unit of Vedanta and holds the international zinc assets, will become a wholly owned subsidiary of Hindustan Zinc. Moving on now, Rattan India Enterprises Limited on 14 January said it has completed the acquisition of Revolt Motors. The company is into manufacturing electric vehicles. Now, after this acquisition, Revolt Motors has become a 100% subsidiary of Rattan India Enterprises Limited, the company said in a statement. The company had earlier acquired 33.84% of the shares with an option to further increase the shareholding. Shares of Rattan India Enterprises jumped in 16 January's trade after the acquisition of electric motorcycles maker Revolt Motors amid heavy volumes. The stock surged 18.45% to hit a day high of 50.4 rupees over its previous close of 42.55 rupees. Right then, as mass layoffs continue, the ripples have affected the telecom industry too. Reports have suggested that Vodafone would be planning to cut several hundred jobs, with the London office taking a major hit. In more news on India's third largest telco, which is reeling under financial duress, Vodafone Idea has seen 20% of its sales team quit over the last few weeks. Accordingly, Vodafone Idea is now scouting for replacements, the reports have said. Also, Vodafone Idea's deepening financial crisis is likely to accelerate market share loss, and the firm would be unable to meet its annual $5 billion spectrum and adjusted gross revenue payable to the government from FY26. The brokerage CLSA has said in a report on 18 January, and Vodafone Idea, which has paid only around 10 to 30% of its license fee and spectrum usage charges for the October to December 2022 period, according to the government officials aware of the details. India's only loss-making private telco has been struggling to close its planned 20,000 crore fundraising, while the government estimates that the telco needs 40 to 45,000 crore rupees. Up next, Indian billionaire Gautam Adani-led group's flagship firm Adani Enterprises Limited on 18 January announced the floor price for its follow-on public offer, which will launch on January 27 to raise up to 20,000 crore rupees. It has also fixed a minimum bid lot of 4 FPO equity shares and in the multiples of 4 FPO equity shares thereafter. In other news, on 17 January, Adani Enterprises signed a deal with Ashok Leyland and Ballard Power to launch a pilot project to develop a hydrogen fuel cell electric truck for mining, logistics and transportation, which would be a first in Asia. Now, talking about Adani's Swedish aerospace and defense company Saab, which had entered into a partnership with Adani Group to manufacture the Gripen E fighter in India. On 16 January, the company has said that it was no longer going ahead with that agreement. Saab and Adani Group had announced their partnership on August 31, 2017. Mats Palmberg, chairman and MD of Saab India, said that it would opt to manufacture the fighters in a company in which Saab owned 74% of the manufacturing entity. And moving on now to consumer durables and retail. Spencer's Retail Limited on January 16 announced the launch of a new format chain, Spencer's Value Market. The new format chain targets value-conscious consumers in Tier 2 and beyond, completing its reach across the entire consumer spectrum. Part of the RP Sanjeev Goenka Group, the retailer will open new stores in 6 South Indian cities this month and 10 stores by March this year. Shares of Spencer Retail surged over 11% in the morning session on January 17 after the company forayed into the hypermarket format. And up next, on 17 January, cigarette to hotel conglomerate ITC announced plans to acquire 100% of Sprout Life Foods, a direct-to-consumer brand startup and the parent company of health food brand Yoga Bar. The FMCG specialist will initially acquire a 39.4% stake in SFPL for 175 crore rupees till 15th of February. ITC will acquire a 47.5% stake for 255 crore rupees through primary subscription by March 31, 2025. The acquisition will allow ITC to expand its future-proof product portfolio and increase the market presence in the good-for-you segment, which currently includes multigrain atta, superfoods, biscuits, ABC drinks, etc. And moving on to our next segment that focuses on major controversies and disputes around corporates. Let's find out which were those corporate giants that were on the radar this week. First up, with the Jalan Kalra consortium now having 6 months to settle their dues and take control of the airline, in latest news, the Maharashtra government on 17 January attached 4 Boeing 777 aircraft belonging to the Jet Airways. The attachment action was carried out by the Tahsildar office in Mumbai under the provision of Maharashtra Land Revenue Code for the non-payment of gratuity to the employees. The grounded airlines employees have been fighting a legal battle for Provident Fund and gratuity. The issue is now pending before the Supreme Court following an appeal by the consortium. And on 16 January, the consortium of Reliance Industries and BP suspended the planned auction of gas produced from its KG-D6 block after the government capped traders' margin on the resale of such gas. It did not give the reason for the suspension, but industry sources said that this follows the government bringing out new rules that limit the margin that could be charged on sale of natural gas. In other news, Reliance Industries is likely to hive off its green hydrogen business to an invitee structure at a valuation of $8 billion, according to a global financial services firm, Jefferies. Now, according to Jefferies, the European Union's and India's green hydrogen sector could translate into $74 billion market for RIL's electrolyzer manufacturing business by 2030. And up next, the Torrent Group has said its offer for Reliance Capital was based on the bankrupt financial services firm's net present value and meets guidelines lenders had set before the auction. Also, the administrator on 18 January submitted before the NCLT that it will hold the second auction for Reliance Capital on 23 January as a part of the corporate insolvency resolution process under the IBC. RCAP's administrator told the tribunal that it will put a hold on the challenge mechanism till Monday and wanted assurance from the Torrent Group and Hinduja Group that they will not withdraw their bids. And a big setback for Google. The Supreme Court on 19 January refused to entertain a plea by the Android maker against the NCLAT order, refusing interim stay on the 1,337 crore rupee penalty on it. The Apex Court asked NCLAT to decide the appeal of Google against the competition regulator's order on the 1,337 crore rupee penalty by March 31. The court also granted Google 7 days to deposit 10% of the penalty imposed by the Competition Commission of India, the CCI. Earlier, the Apex Court queried Google's counsel on whether the tech giant would be ready to practice the same regime in India as what it had agreed to do in Europe. Alright, the Allahabad High Court has given interim relief to Paytm on a GST dispute over the supply of mobile recharge coupons and DTH recharge vouchers. Meanwhile, the Central Board of Indirect Taxes and Customs has told the court that it will issue directions within 3 months. The main issue is whether the supply of mobile recharge coupons and DTH recharge vouchers to recipients who are located in other states would be interstate supply or intrastate supply. The company thinks it is interstate, but the tax department thinks otherwise, which resulted in demand which has now been stayed. Well, that is that for the OTR segment on the radar, and now we move on to our final segment. Let's take a look at what's brewing in the world of startups. First up, Indian startups continue to lay off employees in 2023, with at least 11 tech startups firing 1,400 employees in the first 2 weeks of the year. This accounts for 7.3% of the total layoffs by startups in 2022 as companies seek to cut costs amid economic uncertainty. Up next, shares of FSN e-commerce ventures, which runs Nykaa, tumbled 7.5%
to hit a fresh all-time low of 123.3 rupees on 18 January's trade amid a heavy sell-off in the counter. With this fall, the stock lost 20.5% in the last 5 days. On 18 January, the stock was trading 3% lower at 129.3 rupees over its previous day's closing price of 133.25 rupees apiece. In the last 6 months, the stock has fallen nearly 45%, while it has also plunged about 21% in the last month. And the last one on the cards, car workshop and auto spare parts platform GoMechanic is going to let go of approximately 70% of its workforce. This was announced by co-founder Amit Basin in a long LinkedIn post. With confessions of revenue fraud by co-founder Amit Basin and announcements of layoffs impacting 70% of its workforce, GoMechanic is the latest Sequoia-backed startup to come into the limelight for such discrepancies. The admission by the founders after misleading investors for years by showing fake numbers raises questions about the willful fraud. Investors believe this puts the reputation of other startup founders at risk. With its funding round in jeopardy, the startup is now facing a cash crunch. And calling it a wrap with that on this Companynama episode. See you again next weekend with more corporate and startup updates. Until then, go ahead and download the Money9 app on your Android and your Apple phones. And for Money9's other exclusive shows, have a great weekend and stay tuned to Money9.